All right, ready to dive into this week's crypto roller coaster. We've got a stack of articles here all about Bitcoin, Ethereum, and some interesting altcoins. So let's break it all down.
You know, what's really captivating right now is how these market movements could impact,
And first up, Bitcoin almost hit that, magical six-figure mark, $100,000. We'll unpack what stopped it, if it can still climb higher. What are the experts even predicting?
Yeah, that near miss at $100,000, it's fascinating, right? It's not just a price point. It's like a psychological barrier. Breaking through could mean a flood of new investors.
Definitely, and even more media frenzy, I bet.
Oh, absolutely.
Plus, we've got the inside scoop on a crypto whale who just resurfaced after years of silence, moving millions in Ethereum. You won't want to miss this.
It really makes you think, like, what does a whale know that we don't?
Right.
I mean, their actions could be a sign of things to come, or maybe they're going rogue. We'll have to, analyze it all.
For sure. And for those wondering if Cardano's ADA can ride Bitcoin's coattails to $1 or more, we've got you covered. Buckle up, because this deep dive is packed with insights.
Let's start with Bitcoin's near record high. It briefly peaked at $99,500, but pulled back.
Yeah, what happened?
Massive profit taking. I mean, that's the culprit.
Really? So people just selling off to make a profit?
Yeah. Glassnode, they reported a record $10.5 billion in Bitcoin being sold. Just like that.
That's a lot of people cashing out.
It is. And it makes you wonder, is that level of profit taking typical for a market like crypto? What does that tell us about, investor behavior?
Interesting point. But even with that sell-off, demand absorbed the supply, keeping Bitcoin near the $100,000 mark. That's a lot of resilience.
Absolutely. That suggests a very strong underlying bullish sentiment around Bitcoin. You've got these two forces kind of battling it out, those taking profits and those eager to buy in.
So what are analysts saying now? Can it go higher?
Some are predicting Bitcoin could hit $115,000 by Christmas.
Wow, by Christmas. What are they basing that on?
Well, some factors include increased stablecoin inflows.
Stablecoin inflows, okay.
And the buzz around the BlackRock Bitcoin ETF, that's known as IBIT.
So to understand that, I think we need to talk about what a stablecoin inflow actually means.
Right, yeah. Think of it this way. Stablecoins are cryptocurrencies that are, tied to a stable asset, like the US dollar.
So when you see a lot of stablecoins flowing into exchanges, does that mean investors are getting ready to buy other cryptocurrencies like Bitcoin?
Exactly. They're essentially loading up their accounts, right, with a stable form of value, so they can quickly jump into other assets when they see an opportunity.
Oh, I see. So more stablecoins, that usually means more buying power, which can drive up prices?
Exactly, yeah.
Okay, so more stablecoins potentially pushing Bitcoin's price up. Got it. And what about that BlackRock ETF? How does that fit into all this?
Well, BlackRock is a huge e-investment firm. Their involvement in the Bitcoin ETF space lends it a lot of legitimacy, right? Attracts institutional investors.
Institutional investors, so the big players, the ones who can really move the market.
Right, exactly. Big money.
So it's not just individual investors who are feeling bullish about Bitcoin, it's the big institutions too.
Yeah. If you connect that to stablecoin inflows, it paints an interesting picture. Increased liquidity, potential buying power, now major institutions entering the game. It's a powerful combination for driving up demand.
So it all sounds very positive for Bitcoin, but, are there some analysts who are, even more optimistic?
Yeah, some are predicting between $285,000 and $600,000 during this bullish cycle.
Wow, those numbers are hard to even wrap your head around.
You're right to be cautious about, predictions. There are no guarantees the crypto market, really.
Okay.
But what's important is to understand what might drive those higher predictions. Like what regulations could create that favorable environment for such dramatic growth. That's where the insight lies.
It's not just about the numbers themselves, but understanding the forces at play. Let's shift gears to Ethereum for a moment. It's also seeing significant institutional investment, with Ethereum spot ETFs getting huge inflows.
Yeah, BlackRock's Ethereum ETF, ETHA, saw a single-day inflow of almost $100 million.
Almost $100 million in a day. That's pretty incredible. But I'm curious, what's driving these institutional investors towards Ethereum specifically? Are they just following Bitcoin's lead, or is there something else going on?
That's a great question. One we need to consider carefully as we continue our deep dive here. While this level of investment seems, promising, we also need to look at some potential warning signs for Ethereum.
Warning signs? Like, what do you mean?
Well, while institutional investment is pouring in, technical analysis, which looks at price trends and patterns, is suggesting a potentially bearish double top pattern forming.
A bearish double top, that sounds ominous. What does that even look like, and what could it mean for Ethereum's price?
Imagine like a mountain range with two peaks of roughly the same height. That's your double top. If Ethereum's price drops below a certain support level around $3,250, it could trigger a significant downward trend, potentially even an 8% drop.
8%, that could wipe out a lot of recent gains. Are there any other signs pointing to a potential downturn?
Yeah, we're also seeing some on-chain metrics, which are data points derived from the Ethereum blockchain itself that are raising concerns.
Okay.
Things like the long-short ratio and decreasing open interest, they're indicating that, sentiment might be weakening.
So some investors are getting nervous about Ethereum's short-term prospects.
Yeah, potentially. But how does that square with the news of those massive ETF inflows? It seems like we're getting mixed signals here.
Definitely mixed signals. So we've got these two seemingly conflicting forces at play: positive institutional investment versus potentially bearish technical signals.
Right.
What should we make of it all?
That's the million-dollar question, and there's no easy answer. I mean, the key takeaway here is that, while those bearish signals are something to keep an eye on, it's too early to say for certain whether a downturn is imminent.
All right, before we move on, let's just recap what we've learned about Bitcoin and Ethereum so far.
Good idea. Make sure we're all on the same page.
So Bitcoin almost hit $100,000, driven by factors like stablecoin inflows and the BlackRock ETF, but then pulled back due to record profit-taking. Ethereum, on the other hand, is attracting massive institutional investment, but also showing some potential warning signs based on technical analysis and on-chain metrics. So far, so good.
You got it. Now hold on tight, because next we're going to talk about some incredible whale activity that's shaking up the Ethereum market. This is where things get really interesting. Remember that whale we mentioned earlier, the one who bought tons of Ethereum back in 2016?
Oh, yeah.
Well, they just resurfaced in a big way.
Okay, I'm all ears. What did this whale do?
Okay, so get this. They bought almost 400,000 ETH when it was only like $6 per coin.
Wow.
Now their holdings are worth, get this, $1.34 billion.
It's incredible, that kind of foresight. Talk about being in the right place at the right time.
I know, right?
But you said they resurfaced, so are they selling now?
They just sold 73,356 ETH. Which netted them a cool $224.42 million.
Wow, it's hard to even fathom that amount of money, but that still leaves them with over $1 billion worth of ETH, right?
Right.
Why sell now? It makes you wonder what they're thinking.
Yeah, it's the million-dollar question. Their actions are definitely sparking a lot of speculation right in the crypto community. Some see it as a potential sign of an impending downturn for Ethereum.
Oh, interesting.
While others think it's just a savvy investor taking some profits off the table.
Yeah, if you were in their shoes, what would you do? It's a tough call. Do you hold on hoping for even bigger gains, or do you cash out and secure a massive profit?
It's a dilemma so many crypto investors face, right? The fear of missing out on future gains is just as powerful as the desire to, secure those current profits. It's a psychological battle as much as a financial one.
Oh, absolutely. And when you factor in that inherent volatility of the crypto market, it becomes even more complex.
Yeah.
So while we can't know for sure what this whale's motives are, their actions are definitely something to keep an eye on. Speaking of big moves, let's talk about Dogecoin.
Oh, yeah.
Remember that Dogecoin price explosion a few years ago?
Dogecoin, the meme coin that captured the internet's attention.
It's been relatively quiet for a while, but there are signs that it could be gearing up for another significant price surge.
Oh, really? What kind of signs are we seeing?
Technical analysts have identified a rare high-tight flag pattern forming on the Dogecoin price chart.
A high-tight flag? I'm not familiar with that one. Can you explain what that means?
Sure. Imagine a flagpole with a flag waving tightly in the wind.
So the flagpole represents a sharp price increase. That's your initial surge. The flag itself is a period of consolidation where the price moves sideways or slightly downwards. Once the price breaks out above the upper boundary of that consolidation range, that's when we could see a significant upward movement.
So it's like a coiled spring, building up energy for a potential explosive move.
Exactly, yeah. And based on this book turn, some analysts believe Dogecoin could potentially reach $1 or even surge to $5 or $10.
Whoa, from meme coin to moonshot. But I have to ask, how reliable are these technical patterns? I mean, it's not an exact science, is it?
You're right to be cautious. Technical analysis is a tool, but it's not a crystal ball, right?
Yep.
It's essential to consider other factors such as market sentiment, news events, even social media trends.
Right, yeah.
All of those can influence Dogecoin's price.
So while this pattern is interesting, it's not a guarantee of future price action. Okay, let's move on to Cardano's ADA.
Sure.
It's been rallying lately, up over 100% in the past month.
Cardano has been making some impressive gains. It's definitely one to watch. But, the question on everyone's mind is can it sustain this momentum? Will it hit $1 or more if Bitcoin continues to climb?
Well, CoinCodex, a crypto prediction platform, is forecasting that both Bitcoin and ADA will continue to rally in the coming weeks. What are your thoughts on that? Should we put much stock in these kinds of predictions?
Predictions can be helpful in understanding potential scenarios, but it's crucial to remember that they're just that, predictions, right? The crypto market is inherently unpredictable, and there are countless factors that could influence, price movements.
Fair enough. So what's driving Cardano's recent rally? Is it just riding the coattails of Bitcoin, or are there other factors at play?
One key factor to consider is Cardano's active development community. They're constantly working to improve the technology and expand its capabilities.
You mentioned that earlier, but what does an active development community actually mean? What kind of projects are they working on?
They're focused on things like scalability, interoperability, and sustainability.
Okay.
Building new features, exploring partnerships, fostering an ecosystem that's designed for long-term growth. That kind of, ongoing development can be very attractive to investors.
Yeah, who are looking for projects with real substance.
Exactly.
So it's not just hype grabbing Cardano's price. There's real innovation happening behind the scenes. Okay, so we've covered Bitcoin's push towards $100,000, that Ethereum whale-making waves, Dogecoin's potential surge, and Cardano's impressive rally. Is there anything else we need to cover before we wrap up our crypto roundup?
Actually, there's one more development that we should touch on. Institutional Bitcoin staking is gaining traction.
Staking. I haven't heard that term in a while. Can you remind us what that is?
Sure. Staking is essentially putting your crypto to work. You lock up a certain amount of your crypto, in this case Bitcoin,
Okay.
and in return you earn rewards. It's a way to participate in the network security and earn passive income.
Oh, so it's like putting your money in a high-yield savings account, but with crypto.
Yeah, that's a good analogy.
Okay.
And this this partnership between Anchorage Digital and Babylon Labs is significant because it opens up Bitcoin staking to institutional investors.
So now the big players can stake their Bitcoin and earn rewards.
Right.
What's interesting about this is that Babylon Labs' staking protocol allows for direct staking of Bitcoin on proof of stake mechanisms.
That's right. This is a big deal because Bitcoin is traditionally a proof of work blockchain. Babylon Labs has essentially found a way to bridge the gap between these two consensus mechanisms, which is it's a technical feat that could have far-reaching implications for Bitcoin.
Okay, I'm a bit lost here. Can you explain the difference between proof of work and proof of stake in a way that's easy to understand, and why does it matter for Bitcoin staking?
Sure. Think of proof of work like a mining operation. Miners use powerful computers to solve complex mathematical problems, right? To add new blocks to the blockchain and secure the network. It's energy intensive and requires specialized hardware.
So that's how Bitcoin has always worked.
Exactly.
Okay.
Now, proof of stake is a different approach. Instead of miners, you have validators who stake their cryptocurrency to participate in the network's security.
Okay.
Think of it like putting up a security deposit.
Gotcha.
The more you stake, the more influence you have in validating transactions and adding new blocks.
Yeah.
It's more energy efficient and doesn't require specialized hardware.
Okay, I'm starting to see the difference. So how does Babylon Labs allow Bitcoin, a proof of work coin, to be staked on a proof of stake mechanism?
It's a bit technical, but essentially they've created a system that allows Bitcoin holders to wrap their Bitcoin,
Okay.
creating a token that can be staked on a proof of stake chain. This wrapped Bitcoin is then used to participate in the security of that chain, and in return, the stakers earn rewards.
That's pretty ingenious. So what does this mean for Bitcoin in the long run? Could this change how we view Bitcoin's role in the crypto ecosystem?
It's definitely a development worth watching closely. It could attract even more institutional investment into Bitcoin, potentially open up, new possibilities for decentralized finance applications built on top of the Bitcoin network. It's still early days, but this could be a game changer.
Okay, we've covered a lot of ground in this deep dive.
We have.
From Bitcoin's price movements and whale activity to Dogecoin's potential resurgence and Cardano's steady climb, the crypto world is clearly as dynamic and fascinating as ever.
Couldn't agree more. Just when you think you've seen it all, something new and unexpected emerges, right?
Right. That's what keeps things interesting. So after this whirlwind tour of the crypto markets, what does it all mean for someone who's, listening right now? We've seen record highs, whale activity, bullish and bearish signals. It's a lot to process.
I think we're seeing a really pivotal moment in the evolution of crypto.
Yeah.
It's becoming more mainstream, and that's drawing in everyone from institutional investors to everyday people.
Yeah, it's definitely not just for the tech savvy anymore. But with all this complexity, how does the average person even begin to navigate the crypto landscape? It can feel overwhelming.
That's a really important point. It's crucial to do your research right. Understand the technology behind each project before investing.
Yeah, don't just jump in because everyone else is. Make informed decisions based on your own, individual goals and risk tolerance.
Exactly.
And remember, the crypto world is constantly evolving, so staying informed is crucial. We've talked about so many different factors that can impact the market, from technical analysis to institutional investment to even whale activity. Is there one piece of advice you would give to someone who's just starting out with crypto?
I would say start small, diversify your investments, and never invest more than you can afford to lose. Crypto can be volatile, and it's essential to approach it with a cautious but optimistic mindset.
That's great advice. And as you learn more, don't be afraid to ask questions and connect with other people in the crypto community. There's a wealth of knowledge and support out there.
Absolutely. The crypto community is incredibly passionate and always willing to help newcomers.
Well, I think we've covered just about everything in this deep dive. We've gone from Bitcoin's journey toward $100,000 to the complexities of Ethereum, the surprising resurgence of Dogecoin and Cardano's quiet but steady climb. We even explored the emerging world of institutional Bitcoin staking. It's been quite a ride.
It has been a fascinating journey, and I hope our listeners feel equipped with a deeper understanding of these key trends and events shaping the crypto landscape.
I have to say, one thing that really stood out to me was the story of that Ethereum whale.
Yeah.
It makes you think about the long game and the potential rewards, but also the risks involved.
It's a powerful reminder that while there are incredible opportunities in crypto, it's crucial to approach it with both excitement and a healthy dose of caution. Remember, fortunes can be made and lost in the blink of an eye.
Well said. And as we wrap up, here's something for everyone to ponder. If AI can predict the future of Bitcoin, does that change how we view investing?
That's a thought-provoking question. Does it remove the human element, or does it simply give us another tool for analysis? It's a debate that will continue to unfold as AI plays a larger role in the financial world.
It's definitely something to keep an eye on. Well, whether you're a seasoned crypto pro or just dipping your toes into this exciting world, I hope this deep dive has given you some valuable insights and food for thought.
Happy investing, everyone, and remember, the crypto world is full of surprises, so stay informed and stay curious.
It definitely keeps things interesting. So after this whirlwind tour of the crypto markets, what does it all mean for someone who's listening right now? We've seen record highs, whale activity, bullish and bearish signals. It's a lot to process.
Yeah, I think we're seeing a pivotal moment in the evolution of crypto. It's becoming more mainstream, and that's drawing in everyone from institutional investors to everyday people.
It's definitely not just for the tech savvy anymore. But with all this complexity, how does the average person even begin to navigate the crypto landscape? I mean, it can feel overwhelming.
That's a really important point. It's crucial to do your research right. Understand the technology behind each project before investing.
Yeah, don't just jump in because everyone else is. Make informed decisions based on your own individual goals and risk tolerance.
Exactly. And remember, the crypto world is constantly evolving, so staying informed is crucial.
We've talked about so many different factors that can impact the market, from technical analysis to institutional investment to even whale activity. Is there one piece of advice you would give to someone who's just starting out with crypto?
I would say start small. Diversify your investments, and never invest more than you can afford to lose. Crypto can be volatile, And it's essential to approach it with a cautious but optimistic mindset.
That's great advice. And as you learn more, don't be afraid to ask questions and connect with other people in the crypto community. There's a wealth of knowledge and support out there.
Absolutely. The crypto community is incredibly passionate and always willing to help newcomers.
Well, I think we've covered just about everything in this deep dive. We've gone from Bitcoin's journey towards $100,000 to the complexities of Ethereum, the surprising resurgence of Dogecoin and Cardano's quiet but steady climb. We even explored the emerging world of institutional Bitcoin staking. It's been quite a ride.
It has been a fascinating journey, and I hope our listeners, feel equipped with a deeper understanding of these key trends and events that are shaping the crypto landscape.
I have to say, one thing that really stood out to me was the story of that Ethereum whale.
Yeah.
It makes you think about the long game and the potential rewards, but also the risks involved.
It's a powerful reminder that while there are incredible opportunities in crypto, it's crucial to approach it with both, excitement and a healthy dose of caution. Remember, fortunes can be made and lost in the blink of an eye.
Well said. And as we wrap up, here's something for everyone to ponder. If AI can predict the future of Bitcoin, does that change how we view investing?
That's a thought-provoking question. Does it remove the human element? Or does it simply give us another tool for analysis? It's a debate that will continue to unfold as AI plays a larger role in the financial world.
It's definitely something to keep an eye on. Well, whether you're a seasoned crypto pro or just dipping your toes into this exciting world, I hope this deep dive has given you some valuable insights and food for thought. Happy investing, everyone.
And remember, the crypto world is full of surprises. So stay informed and stay curious.